What's going on, YouTube family? Hopefully you guys had a Merry Christmas. We got one more day before New Year's Eve, but I wanted to give you guys one last video for 2024. Now, today we're going to be talking about how the auto loan crisis is going to be affecting everybody in 2025. Now, I want to give a huge thanks to Fine Legal. They're sponsoring this video, but more on that a little bit later. But the main thing I want to talk about is how much the auto loan crisis is affecting the market currently today. Now, it really hit its stride in 2024, completely changing the lending landscape. Now, if you guys remember, during the pandemic, banks were going absolutely insane with crazy types of financing. People that never bought exotic cars before, driving Honda Accords, were getting $200,000 loans. They were financing for 84 to 96 months. They would do typically maybe 110 to 120 LTV. Now we had banks going all the way up to 180% of loan to value, which means if you bought a $100,000 car, they would finance you up to $180,000 on that particular car. And this is what caused all this basically chaos coming into the used car market and new car market where people were paying overinflated numbers. Well, fast forward to today, banks have hit a record high repo rate, default rate, 60-day delinquency, 90-day delinquency, and 30-day delinquency. So all across the board, banks are getting their butts kicked because they lent way too much money to people that simply couldn't afford it. And not only that, but there were still a lot of people that could afford things back during the pandemic. And this is something that I don't think people talk about enough. Because remember, everything got crazy because of inflation. So if you had a $1,000 car payment in, let's say, 2020, and your rent was $1,500, and let's say your car insurance was $200 and gas was $2.50. Fast forward to today, your rent is now $2,500, so it almost doubled. Your car insurance, it's not doubled, it's probably tripled. And most likely, same thing with gas. You're probably paying close to $5 a gallon now. And this is what's happened. It's basically pushed the people that could afford their payments, now they can't. So we have all the people that can't afford their cars, plus all the new people that can't afford their cars, along with a lot of companies that are going to start laying people off. And I think after the new president gets sworn in, I think they're going to kind of rip off the Band-Aid and tell the American people how bad the economy is. So this is how I think that the actual auto loan crisis is going to affect everybody in 2025. Now, the biggest way that this is going to affect most people is the fact of you trying to get a new auto loan. All those things that you used to know, throw them out the window. If you used to go there with just your credit score, no proof of income, no bank statements, no lease agreement, none of that stuff is going to fly. They're going to be extremely strict on their lending requirements. They're going to want you to put X amount of dollars down. So that 0% down is probably not going to happen anymore. They want big chunks of money down. So this way they know that you're dedicated to the vehicle. They're going to want proof of income. They're not only going to ask for your bank statements, they're probably going to run them through Plaid, which actually double checks to see where the money is coming from and if it's coming on a regular basis. Also, they're going to be checking for NSFs if you bounce checks a lot. They're also going to ask for your pay stub for your employer. They're going to check your W-2s or your W-9s, whatever you get. They're going to double check a lot of those things. And now a lot of us dealers have that type of documentation at our disposal. With Plaid, I can tell you if you're actually getting paid on a regular basis and if you're paying your bills. So all these things are coming in the factor. Your proof of residency. There are so many people that kind of moved around, and what happened was banks were trying to chase down these repos. They couldn't find them because these people moved, so now they're scared. So they want to make sure that you are a solid resident of wherever you're at. So they're going to ask for a lease agreement. They're going to ask for maybe multiple months, if not years, of power bills, gas bills, whatever it is, multiple things to prove that you live in the residence. Another big one is references. Now, back in the day, I used to get 5 references for people. Now they want 10 to 20 references. They want to know the person's name, phone number, address. So if you don't make a payment, they're going to call all your friends and tell you that you're a scumbag and not paying your bills because they want you to basically be embarrassed and pay their car note. On top of that, they're making us dealers or the customers pay for GPSs. They want you to track your car. So if you don't make your payments, they're going to repo it from you that much quicker. Next, they're going to be really focusing on DTI, debt to income. Now, this was a major matrix that dealerships, banks, and other financial institutions used for decades because this can show you how much a customer could truly afford to pay. But they took that number out because if they did, customers could afford more and lend more, and dealerships can make more money and banks can make more money if they gave these customers these crazy loans. It showed a constant proof of people being able to make their payments. When they bring back debt to income, it pretty much crushes 90% of the people going for auto loans because just about everybody has student loan debt. All you guys are paying really high rent or mortgages. Everybody's got credit card debt. I mean, everything basically spells that you cannot afford a $500 to $1,000 car payment. And so majority of the people, that's why they're getting turned down now. So as I talk to dealers all across the United States, I keep hearing the exact same thing over and over again. I can't get this customer approved. No banks will approve them. And if they do approve them, they charge the dealership a massive bank fee. Now, if you guys don't know what a bank fee is, if I sell you a car like this G-Wagon, and let's say I sell it to you for $100,000 and you have okay credit or something the bank doesn't like, they're going to charge me, let's say $5,000 to buy this deal. So instead of me getting a check for $100,000, they're going to give me a check for $95,000. You're still going to finance $100,000, but the bank keeps the $5,000 to put on top of it. So this way, this is their fee for accepting that deal. Not only that, they're also including recourse. Recourse is where I'm married to the car for how many months. So if they say they want 3 payment recourse, that means that if you don't make your first 3 payments on this car, I have to give the bank back all $95,000, and then I, the dealer, have to chase the customer to find this car. Now, none of the banks want to do this. None of the dealerships want to do this because there's too much risk. People will always disappear, flake, and when it comes to paying bills, nobody cares about, anybody else. They just, whatever's best for them. So don't be surprised when you hear a lot of dealerships tell you, no, you're not approved and we're not going to accept the deal, because they don't want to be basically married to the car. I've seen a lot of banks and dealerships do this. And unfortunately, what happens is if you have 1 or 2 of these deals go bad every month, which typically in a recession they do, the dealership is going to owe $100,000, $200,000 to that bank. And if they don't pay it, they basically tell all the other banks this dealership is a scumbag, and they all shut down. And that's currently what's happening now, is we're starting to see waves of dealers not being able to pay their flooring lines, to not pay off other people's cars. You hear all these scams of like, I took my car into this dealership, they never paid it off, but they sold to somebody else. What's going on? It's because they're all floating money. It's like a shell game. They're just trying to move money around until they can make enough money to pay something off. But this is the current climate of where we're in.
And that's what brings us to today's sponsor, Fine Legal. If you've been in a car accident, the last thing you need is to have more stress. Don't worry about it. That's where Fine Legal has your back. Fine Legal is available 24/7. Anytime you need help, they'll connect you to a local accident attorney in your area. These experienced attorneys can help protect your legal rights as well as help you pursue the compensation you deserve. Fine Legal's attorney network works hard to take care of all the legal details, allowing you to focus on what matters most, your recovery. Plus, consultations are free. Services are available in English and Spanish. When you need an attorney on your side, let Fine Legal connect you. Click the link in the bio or call the number on the screen to reach out to them today.
Now, one of the scariest things that I've seen really recently trending is the fact that people are so upside down on their cars. Now, we all know that people were paying way over MSRP for vehicles and basically double paying for cars, but a lot of people forgot about these people that were in the forbearance programs. Now, there was guys on YouTube, I won't mention names, but they were literally telling people, go buy a brand new car during the pandemic, put your money down, and then call the bank and tell them that you're sick, you can't work because of the pandemic, and you get a whole year's of free payments. So people were literally going to dealerships, buying brand new cars, never making a single payment, and then filing for the COVID protection relief, whatever else. And banks were forced not being able to collect on their money. So they had to let that payment go for 1 year. Now, the craziest one I heard is there's this guy, I won't say the name of the bank either, but this bank gave him 3 years of forbearance. After the 3 years, it ended in 2024. That guy still today has not paid a single payment. And because of this, now the bank owes not only the full amount of money when he bought it in 2021, now he owes all the interest that's accrued since then, and the guy's never made a single payment. Why is he going to make a payment on a car that's, $150,000? Because of course it's a Mercedes, and it's probably worth maybe about $60,000 now. That guy's going to drive that car till the wheels fall off or until the repo company finds him. Now, we're not talking about maybe a handful of people that have done this. We're talking about millions of people across multiple states that were all into these little tricks and gags and things that basically rip people off. Same thing with the PPP money. People are using this money to put down on a car when they didn't even have it, but then they started using these forbearance programs to kind of kick that payment down the road. And so all this fraud is just one more thing that's piling up on the auto loan crisis. And this is why I think rolling into 2025, it's going to be much worse for 90% of the people out there trying to buy a vehicle. I hate to say it, everyone that's going to be trying to buy a car today is going to be paying for the past sins of all the other idiots that have bought in the last few months, if not years. Like when I bought my Audi R8, I put no money down, Well, they basically approved me with no money down for 84 months. I still traded in my car. It was like $60,000 or $70,000 in credit that I put down, and I got like 1.9% through Ally. And I didn't show them my proof of income, my residence, none of that stuff. Just recently, I went to go look at another car, and they asked me for everything: proof of income, proof of residency. They even asked for a copy of my social security card, which lets me know that they're really looking out for fraud. So everything has completely changed. So the good thing is if you're looking at buying a car, now with all these more stricter lending rules, it's going to open up a large gap for people wanting to get great deals, because if dealerships can't flip cars as fast enough, they're going to have to lower the prices and negotiate on them more to get these cars out. And that leaves people with good credit and good actual financial steps to get in there and get the deals that they really want and negotiate something that'll be beneficial for you. So if you're looking at buying a car, I know a lot of people are still waiting for prices to go down. I think they're going to dip, but really not that much. I think once the president changes into the new one, you're going to see a little bit of stimulation in the economy before they rip off the Band-Aid and show how bad it is. So I don't think prices are going to drop that much. Now, in the expensive cars, they will. But I think on economy cars and regular cars, they're kind of just fluctuate within maybe 3 to 5%. I don't think there's going to be that much of a difference. So I would buy now if you have the credit and the means to do it, because you're going to get a much, much better deal. Plus, I think in the next year or so, you'll be able to refinance and probably save a little bit of money, but lock in that good deal now. And just for fun, start looking up like on Car Gurus. You're starting to see the average days on market creep up to not only where it was in 2019, but even higher, especially with some of these new cars like Dodge. I think the other one is Hyundai, Kia, a few of these other manufacturers. They have more new cars on their lot today than they did in 2019, which is absolutely insane. So don't believe the hype saying, oh, there's nothing there. I think the only manufacturers that are not really putting out as many cars, Honda and Toyota. I believe that these two manufacturers are going to be pulling back on what they're building because they know there's such a demand for it. They'd rather make less cars and bigger gross and margins than basically pump out all these cars and try to worry about market share. They're kind of going the other way. And now, I think Dodge is at almost a 300-something day supply last time I read, which is horrible. It's like they got a whole year. I remember going to a few Dodge dealerships, seeing 2023 brand new trucks still sitting on their lot, which is absolutely insane. Same thing with the Jeep Wranglers. I remember everybody was fighting over these things during the pandemic. Now they can't give these things away, but they probably, I think they raised them 35% since 2019, which is absolutely insane, the new car price. So to me, it's totally not worth it. But anyways, I'd love to know your opinions of the auto loan crisis, and what are you guys thinking about doing for 2025? Are you thinking about buying a car now before you get in there? I think 2025 is going to bring a lot of really good things, but also bad things. So I know a lot of people are being patient and kind of seeing what's going to happen. But at the end of the day, I know a lot of people need cars. So I would say if you're looking at buying something, just make the move now and just kind of wait it out and see. Now, also another good thing that I've seen coming up down the road is all kinds of crazy lease options. Now that these guys can't sell these cars, I think leasing is a great way to do it, especially when it comes to EVs, because you don't want to own these things in 2 to 3 years when they fall off a cliff. So I've seen Tesla, Hyundai, Dodge, what was the other one? I think it was Ford and Volvo, I believe. All these companies offering crazy leasing options for their EVs. So I would go ahead and look into those and see, because if you're looking at maybe buying a car, just keeping a car for a year or two, I think leasing may be the option for you. But anyways, I want to thank you guys so much for watching. I also want to thank Fine Legal for sponsoring this video. If you guys have any questions, please leave in the comment section below, and we'll see you guys next year in 2025.